right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. We are live checking out the Bitcoin price action, checking out the crypto price action, the crypto market here. And guys, we are seeing a bit of a pullback on Bitcoin that I did warn about yesterday. And I said that this was highly likely to happen. And we are in process of seeing that backtest now. We actually marked out this key level yesterday as our new most important support level below, where if Bitcoin does drop to this support level in a three-wave corrective move, then we could continue up to break up to new highs, coming to about 96.6K, where we do have our large range point of control. So guys, yesterday I talked about this, how Bitcoin was seeing a swing failure pattern of the range highs. We have our 7-week long range here that Bitcoin has been trending in. This range has occurred after we lost our Fibonacci channel, saw the bearish backtest of that channel multiple times, and we dropped down, just forming this bigger sideways range here. Now, over the holiday break, we were talking about not only this bigger range, but we were talking about our smaller range as well. We were talking about this smaller range was unlikely to be resolved until the holidays ended. Well, upon the holidays ending, upon the New Year's, we did get that break of this range to the upside. And when we were able to break above $91,000, we said this was our most important resistance area here, the value area high, the golden pocket, the anchored VWAP. If we can break above 91 to 91,500, then it's likely that we do continue up to take out the range highs and potentially even come up to $96,500, where we have our large range point of control. Well, now we have done that, guys. We have pushed up. We have taken the liquidity, a perfect liquidity grab of those range highs, and we are seeing an expected pullback from this. This shouldn't be a surprise to everyone. I talk about how in the markets, the two most important things that affect price action, that kind of make price action do what it does, is liquidity and volume. And we know that the liquidity at the highs of this range were a definite area where we could see some sort of reaction and a reversal if this larger sideways range is going to continue in here, or if this is going to be the end of a corrective move and now we are about to really dump back down, taking out our lows at 80.5K. But what we want to see here, and I emphasized this in yesterday's video, now that we flipped this value area high and this anchored VWAP to support by breaking above it, our most important level, if we did see the confirmed swing failure pattern, so upon that drop of the swing failure pattern, our most important level, which was resistance, now needs to be flipped to support. If this can be flipped to support, we are likely to not only take out your local highs and continue higher in the range, but we could come up to that $96,000, $97,000 area where we have the point of control above us of our range that spans back to all of 2025. So welcome in, everybody. Thank you so much for being here. Glasshopper, welcome in, man. Good afternoon to you as well. Diamond Palm, what's up, man? Welcome in. And also Samuel S44, thank you for being here. Thank you for modding. Life is divine, man. I appreciate that. I agree with that. Quiles 1100, welcome in, man. Welcome in, Pito. Thank you for the super chat, man. I really do appreciate that. Olafray, welcome in. Good evening from frozen Europe. Wow. Okay. Well, good evening to you too. Man, frozen, how cold is it there? And I know you guys do Celsius over there. So, but I bet it's pretty cold. Warthog, Thunderbolt, thank you so much for being here. And awesome, man. I'm so glad you joined the Telegram. Welcome in, and thank you for joining that Telegram. I hope you do like it. We're going to get, I want to get more active in that Telegram, looking for some scalp opportunities and potential day trade and swing trade opportunities on not only Bitcoin, but on the altcoins. And we are seeing a lot of the altcoins pop off here. So, guys, what we're seeing right now is very, very important for Bitcoin. Time Attack, welcome in. It's so nice to see you in here as well. Thank you for being here, and thank you for modding for me. But guys, this is the backtest. This is the backtest that we do need to hold locally. And by the way, yesterday I talked to you guys about a new naked daily point of control that was coming in at $91,250-ish dollars. We just dropped, tested that point of control and the bullish backtest of our value area high almost perfectly. And we are seeing a nice little reaction from that area. The question is this move down just the start of a larger dump to the downside? And what is going to be interesting for me, if let's go ahead and zoom in here onto the 15-minute chart. Now, after the swing failure pattern that we got of the range highs, we had this kind of grind down here. We had a corrective move up, hitting the golden pocket area. So if we pull that golden pocket from the highs of the SFP to the lows that we saw yesterday or earlier this morning, I guess you could say, and we put on that golden pocket area, you can see we rejected pretty much from that golden pocket area, golden pocket 786, between the golden pocket and 786. We did reject from that area, creating a lower high, and then we started to dump with an increasing amount of volume here to the downside. So the question is this a three-wave corrective move down to bullishly backtest our value area high before continuing impulsive price action to the upside to come up to between $96,500 and $97,000? Or is this the start of an impulse to the downside, a wave one, a wave two, and our wave 3, 4, 5 continuing lower and seeing our first local break in market structure, local push to the downside, where we could then start a much bigger drop? What is going to be key here, guys, is we do not want to start closing. I would say if we start closing 4 hourly candles back underneath our value area high of our range, Bitcoin is going to be in some serious trouble, because this could have just been a 3-wave on larger time frames. Let's zoom out to the 4-hour chart. This could have been a larger 3-wave corrective move to grab the liquidity of the range highs before dumping back down and maybe filling our range all the way to the bottom, or even coming down to take out your 80K lows. And we have been looking at a couple things here. I know CJ's been asking about this in the live streams here, but we have been looking at the larger possible 3-wave corrective move to come up, take out those range highs into our point of control, and then seeing the impulse continue to the downside, where we are likely, if this happens, to take out our 80.5K lows. And I did say in yesterday's video, this is still the highest probability for me. Until we can get back really inside of our Fibonacci channel or start to close daily candles above our point of control, to me, this is the highest probability. Now, I want to go ahead and turn on, I'm going to hide this 7-week long range, and I want to turn on our macro range. Actually, it's already on. This is all of the price action of our 2025 price action, an entire year, this entire upper range of price action that we've been seeing on the charts. This entire range here has been really important for Bitcoin. And what was shocking to me is, yes, we did drop and we wicked below. You can see on the daily time frame, we wicked below that value area low, came down to $80,500, but no daily candle closes below the value area low of our range. Now, once we started to reject from our Fibonacci channel after losing it, I was bearish. I was saying, guys, it's likely that we are going to continue down in a double 1-2 impulse, a wave 1, wave 2, internal 1, internal 2, 3, 4, 5, 4, 5, to continue down, potentially even to take out your 74K lows. We are forming a larger and pretty long corrective range here at this area. But if you go back and even watch my video from late November, like in November 22nd, 23rd, 24th, I was talking about how it is actually highly likely to create a longer range in this area, whether it's going to be a corrective move to the upside or a corrective move to the upside before continuing down, or whether this was a macro low that we're going to put in and we're going to start to reclaim some key levels and push up to our golden pocket around 110K. I still do think this is a corrective move, but we did, no bull divs at the bottom. If this was a macro low, we would want to see some better. First of all, this wasn't the greatest support level at $80,500. And we would want to see some nice bullish divergences on some of the higher time frames. And we just didn't see that on our oscillators, on Market Cipher B and on NAMI. But we were looking at a possible larger, W, X, Y, 3-wave, overall 3-wave complex corrective move, where then after that complex corrective move ends, we can continue the dump to the downside, continue the impulsive price action to the downside. And this is kind of what I'm watching for right now. This will still take some time to play out, whether we're going to start to reclaim really above 97.2 is going to be an important level. So if we take our golden pocket, pulled from the wave 3 highs to the wave 3 lows, around $97,184 to $98,000 is going to be our golden pocket. And this is a really, really important golden pocket here on the chart, because if we do come up to that golden pocket and hit that golden pocket, then that is a hard invalidation for this being a double 1-2 impulse to the downside. So if we do come up here, hit that, even if we reject from this area to continue down and see a bigger dump to the downside, it would at least invalidate an overall double 1-2 impulse that would be occurring here. And we would have to look at this as, we would have to rework this as a different Elliott count to the downside. Now, I do know some Elliott wave analysts that are looking at this instead of a double 1-2 impulse. They're looking at this all as a wave 1. This is a wave 2. All of this is your wave 3. And we're in the wave 4 right now before continuing down in a wave 5 to the downside. So we can also pull our golden pocket. Let me get rid of this golden pocket first. We can pull our golden pocket from those highs at 116K. That was an important rejection of this range and a golden pocket and a liquidity grab of the range. And we could look at this golden pocket. Now, this golden pocket, you can see, has some very interesting confluence. We have our anchored VWAP from the 74K lows that are coming in there. And if we turn on our 50 EMA or 50-week moving average, our 50-week moving average is pretty close to that golden pocket. Yes, it is below that golden pocket, but it's coming in pretty close to that golden pocket. And we do know historically within these bull markets, within the Bitcoin cycles of bullish and bearish cycles, the 50-week moving average has often acted as macro support in a bull market. But then once you lose it, you often will bearishly backtest that area. And then if it rejects, you see the bull market, the bear market start, excuse me. So you can see here throughout the entire bull market, that 50 moving average was acting as resistance. We flipped above it, support, 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 support. You break below it. Oftentimes we will come up to back test that 50-week moving average. And if we do reject that 50-week moving average, that's when the real volatility to the downside can start. That is exactly what happened in the last bear cycle that we saw. The bear market, was holding as support through most of the bull market. You lose it. You have that larger 3-wave corrective move to backtest it. You backtest it, you reject, and then you get the harsh volatility to the downside, continuing the overall bearish market structure. But what I want to talk about is if we look at specifically this price action at the start of the bear market last cycle, you can see that Bitcoin saw about, let's grab this. What was that? That was a 50% drop to the downside before backtesting that area. Now, we've only had a 36% drop from all-time highs so far in this. If this is the start of a bear market, we've only had a 36% drop, but we could be looking for something very similar. The market doesn't repeat, but it does rhyme. And so if we're going to pull, we can just pull a fractal of this price action, and we can apply it to what we're seeing possibly right now if we are going to see the start of a bear cycle, a bear market. And you can see that, let's go ahead and squish this up a little bit here. Very, very similar price action here in terms of the market structure. And even if we look on different exchanges where that October 10th wick, wicked quite a bit further on some exchanges than it did on Coinbase or on the index chart. But this price action is very similar to what we are seeing right now in the market for Bitcoin today in this last few months of price action. And if we do come up to backtest that 50-week moving average, that is going to be a key area where if we do reject, I will be looking for swing short opportunities to take out our 80K lows, but potentially to come all the way down and hit 50K area, 49, 50K, to take out some key liquidity below us. I'm also looking at the key liquidity level of the $74,500 area. We do know that that is an area we've been watching on a macro structure for quite some time now to come down to about 70K. And I've been talking about this as, let me just zoom out to the 2-day chart here. The potential end of a 5-wave impulse, a big weekly 5-wave impulse in the bull market. After your impulse finishes, you're looking for a corrective move, any sort of corrective move, whether that's a 1, 2, 3, 4, 5, and then you get a sharp correction, an A, B, C coming down to your golden pocket, making a higher low, and then continuing impulsive price action upwards, or whether at the end of the 5-wave impulse, you will see a flat correction in here before continuing to push up. And I did say months ago, actually, I said this all the way back in December, that the best thing to see if we wanted to see for the most bullish case scenario we wanted to see for a super cycle type price action is to see a flat correction after having this first big push down, this impulse to the downside. We would want to see a flat correction in here where we could take out those A-wave lows and then continue the bullish super cycle, continue a new impulse to the upside and possibly a super cycle. So this is one of the theories that we've been looking at for quite some time now. And I have to say, when we started to reject from that pitchfork midline, we created this distribution range right up in here at the pitchfork midline of this multi-cycle pitchfork with weekly, monthly, and daily bearish divergences confirmed on the chart, multiple drives of weekly bearish divergences, even 2-month bearish divergences on the chart. And we rejected from our key target of a flat between the 1.382 and the 1.236, rejecting perfectly from that area and starting to break market structure to the downside on impulsive price action, on increased volume to the downside. I said, guys, it's highly likely that this is about to be a C wave impulse to the downside, where the minimum target for this is to take out our 74K lows, 74.5K lows. Now, with how long this corrective move has been taking, we might have to rework the way this impulse is. So far, the impulse to the downside has not been invalidated yet. But if we do start to hit 97.2, we'll at least say, hey, this is not a double 1-2 impulse. We could look at that other count of it being a single 5-wave impulse to the downside. And if that's the case, then what we want to look for is pulling our Fibonacci retracement from the highs of wave 2 to the lows of wave highs of wave 2 to the lows of wave 3, or the start of wave 3 to the end of wave 3. We want to put on those wave 4 targets between the 382 and the 0.5 Fibonacci. And we did reject. You can see the first rejection here, 382. And we could come all the way up to about $98,500, reject from that $98,500 area of resistance, and still see this larger impulse to the downside still play out here, where we could then, after rejecting from 97, 98K, drop down and finally come down to take out your lows of 74.5K. Now, depending on how this happens, after, say, we do come down and take out these lows, maybe even drop to the golden pocket at 70K, I will be looking for swing long opportunities between 74K and 68K. But we would have to be careful that this could be the start of a bigger impulse. Let's say we finish this impulse to the downside. We would have to be careful for a 3-wave corrective move. And by that time, your 50-week moving average might be around that golden pocket, rejecting and then continuing the really bearish price action to the downside. But this is what I'm looking at overall on a larger time frame. Now, on the smaller time frames, we're at that very important bullish backtest right now. We're backtesting the value area high of our range, of our 7-week long range. It's also our key anchored VWAP, and it was a naked daily point of control. If this holds and we start to push up, now let's actually look at our volume in here. Let's turn on our volume. Yeah, not too bad of a spike in volume on this dump to the downside. Actually, you can see overall, yeah, I mean, overall volume is decreasing from that high, but I don't like how we had very, very low volume and then a nice huge spike here on this drop here, because that means internally this could be a 1-2, and the third wave generally sees a big spike in volume. So that means this could be a third wave. So if we're looking locally here, if we're going to finish an impulse, a 5-wave impulse to the downside here, then what we want to be looking for is a rejection between your wave 4 targets. So if we pull that same Fibonacci, the 382 to the 0.5, between this wave 3, we would expect to reject between about $92,400 and $92,800. That would be the rejection, where if we do reject from this area, we might continue down to take out, to break our local lows for today, but probably to come down and take out this liquidity at $90,800 that I talked about yesterday. Let's check out our order flow. Oh, dang it. All right. We will check that out in just a bit. Let me see here. Give me just a second, guys. I am going to open up another chart here. While I'm doing that, I'm going to check the chat. Welcome in, everybody. Thank you for being here. Yeah, Quiles, what's up, man? It's good to see you. Glasshopper, we'll look at Tau. Absolutely, we can look at Tau. Decrypto, welcome in, man. It's good to see you. Good afternoon to you as well. All right, guys, give me just a second here. All right, I'm going to throw this on the chart. This is our order flow. We're going to look at the open interest and the CVD here. Let's zoom out to the 15-minute chart. Yeah, guys, and wow, we did have a lot of longs stepping in from this initial low that we saw earlier today at $93,000. And a lot of longs were stepping in. You can see here, CVD was increasing here. Open interest was steadily increasing. So those were new long positions coming in, pretty much longing every little pullback on Bitcoin. But I understand doing this towards the beginning of our bigger push to the upside, any little pullback in here, you know, you could long that, pull back, long this. Of course, with good risk management, you're longing the bullish market structure, continuing the bullish momentum. Our money flow looked really healthy. We were not really seeing any bearish divergences come in on the chart. But when you take liquidity of a range high, it's very risky to long a pullback of that, because it could be a higher low before dumping. So we are seeing a lot of late longers that are now getting pretty much trapped. All these late longers that longed within this area, you can see those longs. And then as soon as we start breaking that area, we get that big dump in open interest here. Those late longers are getting stopped out or liquidated out of their positions. But we are still seeing the market come in relatively bullish here. We did see, after that dump, hitting the back test of the value area high. Look at this. A lot of long positions. A lot of long positions are stepping in here. So the whales, the bulls, are trying to defend the back test of that value area high. That is somewhat of a good sign. And I have to say myself, I did take another TP on my swing failure pattern short. I took out 25% more. I took out 50% like rate as soon as we started breaking the VWAP here this morning. But I did take another 25 there. So I still have a 25% of that short running. But I also did open a scalp long from this area, from about $91,330. And looking for possible continuation to the upside here, to break up, to hit that point of control. And one of the reasons I'm looking for that point of control to be hit, let me just go ahead and hide this for a second. We'll zoom out here, is because of the fact that we held overall the value area low of our larger range. We came down, held the value area low for many weeks, many support tests of that value area low, and now we're pushing to the upside here. So anytime you hold the value area low as support and start to see a bounce with some impulsive price action, it's likely to continue up to test that point of control. Now, that point of control is considered the fair value for Bitcoin over the past year. The entire year of 2025, the fair value for Bitcoin has been around $97,000, $96,000. So depending on how we come up here, if we hit this area and the overall market is bearish on Bitcoin, we would expect to see a sell-off when it gets to fair value and a push back down to at least the value area low, or to break your lows from this move to the downside, 80.5K. All right, let me, Job Feel, welcome in, man. Good afternoon to you as well. Yeah, guys, please hit the like button. Please subscribe to the video. While we're here, really quickly, I just want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some of the larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you trade within the futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. So for instance, if you deposit just $100 here, you can get a 50% deposit bonus, and then various 20% and 10% deposit bonuses here. If you'd like to do that, use the affiliate link in the description below. Now, I have partnered with BYDFI to create a Telegram community where I do post my thoughts on the market, trade setups. You guys can tag me in the chat there, in the general chat, ask me questions about Bitcoin or some of the altcoins. And if you're interested in joining that Telegram community, it is free. All you need to do is sign up with BYDFI using my affiliate link and then deposit $100 into the exchange. That $100 is your money to trade with. You will get the 20% discounts on trading fees, and you can earn that futures trading bonuses depending on how much you trade in the futures markets, how much volume you move in the future market. Now, once you've done that, deposit the $100 into the exchange, click the Telegram link in the description of this video. And once you're in that Telegram, you want to type in /verify in your user ID, which is it's going to be right up here, right next to your little character. It's probably going to be a string of letters and numbers for you guys, but /verify in your user ID, you'll automatically be put into that Telegram community. And once you are in, you are in. Okay, second partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator down below here. I use this for all my confirmations on my trades, whether to enter a trade, whether to exit a trade, or whether to not take a trade at all based off of lack of confirmation. So first, what I do, you guys know, for me, price action first, indicator second. I mark out my key levels of interest. I usually mark them with a box. Green boxes for support, purple boxes for resistance. You can see this purple box for resistance we had up here. And as we're coming up to that level, if I see bearish divergences or hidden bearish divergences on the chart, you know, I'm looking for confirmation on my indicators. If I see the confirmation, then I'll take the trade from that area. If I do not see the confirmation, I won't take the trade. And so for me, NAMI has been an invaluable tool to help me maximize my profits in trading, maximize my entries and my exits on my positions. If you're interested in purchasing NAMI, the link is in the description below. And also, I have partnered with NAMI. The Divine Hood channel has partnered with NAMI. I got you guys a 50% discount. So if you're interested in purchasing NAMI, it is a paid indicator. Divine50 is the discount code, and you guys will at least get that discount to make it half as expensive for you. Then lastly, we do have Bybit and MEXC. Both are great exchanges, both offering, you know, discounts on trading fees. Bybit is offering up to $30,000 in futures trading bonuses, and MEXC is offering a 10% initial deposit bonus up to a certain amount. So if you're interested in signing up, it's a way to help the channel. Signing up with those exchanges, it's just a way to say thank you and a way to help the channel. All right, guys, that's it for the partners of the channel. Let's get back to the TA here. Let me check the chat and see how everyone's doing. Mind Tapestry, welcome in. It's good to see you. Just saw you streaming. Excellent. Just in time. Yeah, I'm doing well. I'm doing really well. This is exciting for me. You know, for quite a while, actually, those last 3 weeks were pretty brutal, ranging within this small range. Now, I expected it because it was a holiday week and weekends. But now we're finally starting to get some volatility, which as traders, we want volatility. And you guys, range trading. One thing I recommend, if you're going to be a long-term trader, learn how to trade ranges. It is liquidity levels within ranges are super important. Volume levels within ranges are super important. And range trading is really, if you master range trading, you can really make a lot of money trading and scraping some money away from the market makers every single day. So we're still within our bigger range. We just took out the highs of that range, and now we're coming in for that important bullish back test of the volume level of that range, which was the value area high. If we can hold it, I expect us to continue at least up to our point of control. If we fall back inside, and especially, guys, if we close a daily candle back underneath $91,200, that's when I'm going to get real concerned for Bitcoin that we could see a bigger dump to the downside. But we do have support levels within this range. We have actually a few really nice support levels within this bigger sideways range here, this 7-week long range. That I mean, if we dump back inside of it, it's not like we're going to dump straight down. We will see bounces along the way. We will see, some scalp long opportunities and also some short opportunities within this range. Let's see here. 2 requests if you get a chance. GPD, USD, and where do I get my Shilajit? So it's called Healing Shilajit. I will look up the website for that and I'll send it to you. But man, I had that just the other day. I gave it to Jason. Let me see here. See if I can get that. And I do recommend you guys try it. It's really an awesome. Let's see here. Okay, link. All right, I'll post that link in the description here. There we go. For me, it's been really helpful. Shilajit. It's an all-natural substance, pretty much plant material that's been compressed between thousands of tons, millions of tons of rock for hundreds and thousands of years, and it's just a great overall natural supplement for the body. And yes, we will cover GBD, GBP. Why is that so hard for me to say? USD. All right, CJ, welcome in. CJ, so remember last week you were asking me about is it still likely that we're going to come down to 78K? And I told you, yes, I still think overall it's likely that we hit 78K, but we might see that larger 3-wave corrective move to come up to $96,000, $97,000 first before we get that move down. I remember specifically telling you this. I think it was last Friday's stream, and that's what is happening now. So depending on how high this moves up here is going to let me know whether we're going to see that push down to 78K, because if we start to really impulse up out of here, then and really specifically break above that 50-week moving average, then I'm going to say, hey, 78K is no longer likely, that we are going to continue up pushing up, probably up to like 108 and 110K, where that golden pocket is, our large golden pocket. And if we look at that golden pocket, guys, if we pull that golden pocket, you can see that golden pocket's coming in right at the value area high of our range, of our macro range, between 108 and 110. Now, this was a 36% drop to the downside. So on more than a 30% drop to the downside, you should be using your fibs based off log scale. And if we do that, that actually lowers your golden pocket to between 106.3 and really 108K or 107.9. And that is still going to be an important golden pocket because there's very important liquidity resting right into that golden pocket. And this liquidity grab is super important because that is when the real dump started happening right after we rejected that anchored VWAP, that 74K anchored VWAP is when we saw the very bearish momentum come in, and we saw that big increase in volume on this dump to the downside, this leg of the dump to the downside. So I'll be looking at that. I'll be looking at both golden pockets, but that log golden pocket with that liquidity grab is looking super juicy if we do get up there. Okay, let's see. Or is this a fake out? Now, I don't think this is a fake out. What this is we held the value area low of our macro range, and so it's likely that we come to test the POC. But also, CJ, when you were asking last week, we were holding the value area low of our smaller 7-week range. So let me turn off that macro range. Let's turn on this range. And actually, we held the value area low here at that $84,500 area. And then we pushed back up into the volume profile, and we were chopping around the POC for most of that Christmas break. And I said it's likely that we at least push up to take out the liquidity at $91,000. We had some key liquidity resting in there and a golden pocket resting there. But I said if we break above 91,000, then yes, we're going to absolutely come up to take out your range highs and probably come up to like that $96,000, $97,000 POC. So this could be still a larger corrective move, a complex corrective move, getting everyone to long the breakout of 91K only to get trapped underwater and then have that drop down to 78K or even 74K. So now I'm talking about swing positions, like bigger swing chip positions, because I did just long this $91,300 level earlier today, but I'm playing this as a scalp. So if we do come down, or I mean, we're coming down right now to backtest that value area high, and we're seeing a nice reaction so far from that value area high, that naked daily point of control and that anchored VWAP. But what I'll be looking for now, as soon as we take out our highs from yesterday, I will take a TP1. Even if I expect this to come up to 97K, as soon as we take out these highs, I will take a TP1, move my stop loss to break even, and then go from there, leaving some of it open to run really all the way up to $99,000 or $98,500. All right, let's go. Yeah, Chad P, welcome in. K Glay BKK, welcome in. Let's go, guys. Thank you guys for being here. Gerby Q, welcome in. If Nami was smart, they'd offer a monthly payment option to completely undercut Market Cipher. I think they do, or I think he's the creator's talking about it. If he hasn't implemented it yet, I think it's in the works. And I could talk to them about that. Gerby Y or Gerby Q, I'll talk to him about that. BTC is rejecting from the 0.38 level. Can you please check it out? So our 0.382 Fibonacci. Yeah, let's check that out. From the highs of wave 3 to the lows of wave 3, we're going to turn on those wave 4 targets. Okay, we're coming to that 0.382 Fibonacci. I wouldn't say it's a rejection yet. Yes, you got a small little reaction the first time you tested it. Let's zoom in here and let's go to the 5-minute chart. Let's see how this looks. I mean, no real bear divs here. Nami does have the potential for some 5-minute bear divs. Let's check out our 1 minute here. Yeah, 1 minute Market Cipher bear divs. Nami has some bear divs in here. Not super locally, but and the big thing here, guys, is as we were coming up to that SFP yesterday, we actually finally confirmed some bearish divergences on the chart. Higher highs within the price action, lower highs within the momentum waves, and your money flow had been consistently draining out here. Nami as well. Bear divs confirm. Now, we did not have money flow bear divs on Nami, and that's one of the things when I see momentum bear divs on Market Cipher B with money flow draining out, and we have Nami momentum bear divs and money flow bear divs, that setup is like the prime confirmation I look for that plays out, I would say 80-90% of the time. But you can see our money flow is right about to cross over into the red here on Market Cipher B. It's already crossed into the red on Nami here. And if we don't hold this area, then I think those larger bear divs are going to play out and we're going to see quite a dump to the downside. And I would be looking to come down between 87,500 and like 87,900. And I'll cover that in just a second. But you can see on Nami, confirmed bear divs in here on the 4-hour chart. Now your money flow is finally topped out and has started to drain out here. We do not have bull divs yet on the 4-hour because Nami is much quicker than Market Cipher B as far as the momentum and the money flow. Let's go to the 8-hour here really quickly. Yeah, I mean, guys, 8 hours still looks pretty good. Money flow looks still pretty healthy. And on the 4-hour, money flow was looking unstoppable yesterday. But now it has finally started to roll over here, which is to be expected. We had the swing failure pattern. From this swing failure pattern, if you watched yesterday's video, I was expecting this drop here. I was absolutely expecting the drop to backtest because what we're seeing as far as our range, guys, we're just range trading here. A lot of people are getting exciting for this pump, which I understand that, you know, it is nice and the altcoins can push up quite aggressively, but all we're doing is still just trading within our larger range. So this is where you got to keep your emotions in check. And a lot of people will say, oh, 200K is coming next month, or you know, Bitcoin's going to break to new all-time highs next week and stuff like that. It's like, guys, no, we're still just range trading. We held the point of control of our range. We broke out of the value area high. Now, this was exciting. The breakout of the value area high was exciting because that meant we're probably going to come take the range highs. But after taking those range highs, you would expect, or after a breakout of this volume profile, you expect to come up to a key resistance. Well, the liquidity grab is a very key resistance. We grabbed the liquidity. So now after that liquidity grab, what are you going to expect? You're going to expect the bullish backtest of that breakout. This was the breakout. Now we're having the bullish backtest of it. If the bullish backtest succeeds, you go higher. You're highly likely to take out your highs from yesterday and continue higher. So that's what we're in process of right now. And we're looking at that wave 4 target between the 382 and the 0.5 Fibonacci for a potential rejection, where this would be a wave 1, wave 2, wave 3, wave 4, wave 5 to take out, I would say, to take out these $90,800 lows in here. What I will say about this does look more corrective than impulsive down here. Yes, we could probably count a 5-wave move down within this price action, but your wave 3 should be pretty, the common target is between the, at least to come to the 1.618 Fibonacci extinction. And let's actually check that out here. I haven't checked that out. Yeah, we did hit that 1.618. So because we hit the 1.618 Fibonacci extinction and we actually surpassed the 1.618, it does make it more likely that this is impulsive price action. A 1, 2, 3, 4, 5 to continue down. Because in a 3-wave corrective move here, your key targets are between the 1-to-1 and the 1.236. With an expanded flat correction or expanded correction, sometimes you will come down to the 1.618, but it's rare. Now, if you surpass the 1.618, that makes it far more likely to be impulsive price action down. An impulsive move rather than a corrective move. Another important thing to watch for is your volume. If you're seeing, as you're dumping in this 3rd wave, you would want to see volume increasing on that entire dump. So here on the 12-minute chart, it actually is pretty clear that we are seeing volume increase on this dump to the downside on this leg here, making it also more likely to be a 3rd wave dump to the downside. So now we got to be looking between the 382 and the 0.5 Fibonacci. Let's see if we have any levels within this area. I just want to see where our naked daily point of control. Okay, it's quite a bit higher here. Now, yes, this is not confirmed yet. It won't confirm for a few hours here. We do have some internal liquidity. This internal liquidity here after this little bounce. This guy in here coming up into your 0.5. And if we chop in here for a bit, coming up, your VWAP could be close to that 0.5. Now, that would I would expect that to take, half a day or so if we're going to see that larger 3-wave move, because your wave 4 corrective move is usually as long or longer than your wave 2 corrective move. So if our wave 2 corrective move took, what was that, 11 and a half hours, we would expect this wave 4 corrective move to be similar in time or longer in time. Oftentimes your wave 4s are longer in time. So moving up this quickly, this quick bounce off of the bullish backtest of the value area high, we might see something like, and you generally want it to be a 3-wave corrective move. So we might see a small pullback, get a move down to your local golden pocket, and then another push up to hit that 0.5 Fibonacci. And that would also give some time for that VWAP to kind of get down there. But if we keep pushing up aggressively like we are now, then I have to say, even though this surpassed the 1.618, it's going to be a continuation of the larger impulse to the upside. So what we could look at, and of course we could also look at a much larger complex corrective move. Bitcoin's been looking at complex corrective moves a lot lately. So what I mean by that is we just took the liquidity of the range highs, and after a liquidity grab, we might be seeing something that is a 3-wave corrective move, a back test to get a 3-wave corrective move to take out those range highs, and then another corrective move down, creating a larger flat correction in here. And that kind of range that you often see on potential breakouts of range highs. It gets a bit confusing, guys. It gets a bit complicated here. all I would say is let's just keep an eye on that 0.382 to 0.5 Fibonacci right now. And if we break above that 0.5 Fibonacci, which it looks like we kind of want to, let me check the order flow again. Let me pull that up here. Man, this is a bit of a short squeeze we're seeing right now. So look at our open interest is starting to decrease here. First off, we saw a lot of longs stepping in on the back test of the value area high. You could see right here. Fresh long stepping in right on that back test of the value area high. Nice spike in your CVD. That means market longers were longing, and you could see huge increase in open interest locally, meaning it was fresh long positions that were longing that bullish back test. Now we're starting to push up here, and we're squeezing out some late shorters. It looks like right here, you saw some shorts coming in. So let's see here. Yeah, we saw shorts coming in this whole general area. So if we start to push up and we're starting to squeeze, that open interest is dropping because we're starting to squeeze out the late shorters that shorted that dump down from earlier today. I just want to check out our local golden pocket. So we're going to pull a golden pocket from the highs of yesterday, those swing failure pattern highs, down to the lows we just created. And let's look at that golden pocket. Okay, and actually I want to look at, this would be the invalidation. If we hit this golden pocket at, what is that, $93,200, it would invalidate this as an impulse down. If we hit this, even if we see a small pullback from that, we would expect to continue up, to take out the range highs, these highs. We can also look at this as a small range here. We have our sideways range. Okay, what I see that is interesting right now is the back test of that range is going to be right around the 0.5 Fibonacci. We've lost this upper range, so now upon losing the upper range with an increase in volume, if you bearishly backtest this here and reject, then you would at least locally expect to take out this low. And that could be that 1, 2, 3, 4, 5. We're coming up pretty rapidly here. Like I said, we generally want it to be around 11 hours, 11, 12 hours. Okay, we are ranging 70% of the time, so learning range trading is a must. Yes, time attack, great point there. Most assets range more than they are trending, unless it's like the S&P 500. But range trading is a must. I agree. Yeah, it's been a great scalping environment, but also we have the opportunity, guys, if we start to break this range for great swing shorts or potentially even swing longs, like good swing opportunities are coming. You know, this range that we've been in for 7-8 weeks is starting to potentially mature and resolve itself. And so we could be seeing a big move soon. All right. Yeah, Mind Tapestry, absolutely. Thank you for being here. I remember that I saw your video too. Cool insight, but this pump looks aggressive. I don't think we can go that low once we get above 100K. Yeah, CJ, to me, I get what you're saying. If we break 100K, 100K is also an important psychological number. But people don't get, like, this last push up in a larger corrective move, whether this is a WXY or an ABC, but that last push up tends to be an impulsive push up on a large amount in volume, and it gets everyone to long, especially towards the top of that impulse. And then you stop it and you reject, and that is when you trap those traders, and the market makers use it as fuel to really push it to the downside. So I still would be, now, if we start closing daily candles above 97K, you know, our mindset does have to shift a bit because we're breaking above the point of control and closing a daily level above the point of control. We'll have to just see how this plays out. Let's see. Abless Lamb Carnell Camel, welcome in, man. GG to you. Sorry that I butchered the name. I'm so bad with the YouTube name, guys. So if I ever butcher your name, it's not intentional. It's not a slight on you guys or anything like that. Why is important in the CVD? And what is important in the CVD in Coinalyze, normal CVD or aggregated future CVD? So I use normal CVD on that hold on, let me get to the other one here. I use normal CVD here, but I use an aggregated open interest because open interest is just measuring the amount of positions opening or closing. So when I'm looking at the overall market environment, I want to see what most exchanges are doing, not just one exchange. And as far as CVD goes, Bybit is one of the largest derivatives trading platforms there is. So I've noticed with Bybit CVD, it tends to work the best. Coinbase also has pretty good CVD on there, but Coinbase is more of a spot exchange. So if we're looking at kind of like CVD divergences, Bybit CVD tends to work the best. So I use normal CVD, but I use an aggregated open interest. And in my time looking at this at Coinalyze for quite some years now, I have seen that aggregated open interest overall gives you a better kind of fingerprint on what the market's doing rather than just the open interest from one exchange like Bybit itself. But regular CVD on Bybit is pretty OP. 1 minute head and shoulders. Let's see. Let me get back here to this art. Yeah, I think I see what you're saying here. Hold on. Let me just. Are you looking at, well, like up in here, a head and shoulders, or if you're looking at this, like a left shoulder here, head here, right shoulder here, and dump? I mean, as far as, and I know I'm on the 3 minute chart, not the 1 minute chart, but as far as I would say, I would rather be looking at the volume levels and the liquidity levels. So we took the liquidity, and this was our important volume support down here. And then, of course, our important volume resistance locally is going to be the back test of that value area low of this sideways range. So it's going to be right around that 0.5 Fibonacci. Yeah, okay, I did that. My swing short is still active, and I'm mostly biased towards 78K, but this pump is making me overthink stuff. No, CJ, I understand that. And here's the thing. When we start to really push up like this and the market gets hyper excited, it is hard to still stick to a certain sentiment, and by the way, sentiment should change based on what this chart is doing, not based off hype or excitement or anything like that. It should be based off technical analysis, market structure, and maybe Elliott wave theory if you're an Elliott wave analyst. But I would say overall, nothing has changed. This still is more likely to be a corrective move. Now, we had to say it's going to be a larger complex correction because of this push up that we're seeing specifically with the amount of increase in volume here. But we were looking at this as a larger potential corrective move here before continuing down. Okay, thank you for picking up the question. Yes, and guys, I'm going to go through those the altcoins right now, and we'll go through whatever that other one was, that Forex pair. Mark Dutch, welcome in, man. Great to see you in here. I hope you had a good New Year's, and I hope you had a good Christmas, man. Thank you for being here. I typed WTF is Himalayan healing shit, and Google sent me here. Well, Google knows that I'm into that healing shit, man. Oh, that's so awesome. Thank you, Mark Dutch. Welcome in, man. I love it. Mark Dutch has the best entries into any live stream ever as well. Like the best. Okay, let's go through what was I going to be looking at here? Tau. Wow, it's pushing up pretty aggressively. I thought I had a better chart. Let's see. Yeah, okay. So here's the thing on Tau, guys. We have our larger volume profile. Now, I understand that this is most of the price action of the coin, but this is our sideways range that we're trading in on Tau. And within the larger sideways range, we have an even more important upper range. This upper range on the daily time frame was really important. We broke that range to the downside. You can see, let me hide some of these levels really quickly. Clean this up just a second for you guys. All right, so this upper price action, this upper daily range, a few months of price action here. When we lost the value area low, we came up for the back test, we rejected. So upon that rejection, you expect new lows to be coming in, taking out these lows. That happened. You can see we actually SFP'd those lows, and then we got to push up. We created a lower high, and then we lost the range. So even in itself, this was a little bit of a range that we were seeing below the value area low of this range. So we dumped down to our golden pocket. That was our logarithmic golden pocket, pulled from the crash lows of October 10th to the highs that were made afterwards. Came down to your golden pocket, was able to kind of form a range down here, a bottoming range, almost like a inverse head and shoulders pattern, or a accumulation, a Model 2 accumulation. Let's zoom in onto the 3 hour. You can see this nice little bottoming range here, whether you want to call this like a tap 1, a tap 2, and maybe a triangle here and a tap 3. But what I can see here is we're reclaiming the golden pocket. We're reclaiming the value area low of our large range, our largest range, which is very important. And we're reclaiming our pitchfork band. This here, this line, and this line are our pitchfork band. So we busted above our pitchfork band. Let me zoom back out to the daily so I can show you that. So this pitchfork band right in here, we're reclaiming our pitchfork band, but reclaiming this value area low is important. And now because we're reclaiming that value area low, it's likely that we continue up to test the value area low of our smaller range above us, the range that we broke down from a few months ago. So we can zoom in on the price action that we're seeing from the lows. And what I can say here is this does look impulsive. This entire structure here looks very impulsive, and it looks like a double 1-2 impulse for me. Wave 1, wave 2, internal wave 1, internal wave 2. We're in our third wave here. So when you have a 1-2, 1-2 here, you have your third wave, and then when your third wave ends, you get now a 4-5, making a new high for your fifth wave, and then you're going to get an internal 4 and an internal 5, or a secondary 4, secondary 5, because we had our primary 1-2, then our secondary 1-2. So now we need, because we had 2 1-2s, we're looking for 2 4-5s, and it generally ends on a contracting diagonal, or like a wedge, a rising wedge, if you want to talk in terms of pattern trading, or generally a parallel channel. You get that ascending parallel channel. And that is the exhaustion of bullish price action. So for me, overall, Tau looks like it wants more upside. But that third wave, the question is this third wave done with? And what we can look at is we can pull our trend-based Fibonacci extinction. Let me just zoom out a little bit here so I can make this easier. We'll go from the lows of 1 to the highs of 1 to the lows of our secondary 2. Yeah, we're hitting that 1.618. Let me make sure. Yep, that's on log scale. $2.618. Man, this is definitely likely to keep going here. You're hitting the 3 Fibonacci extinction. So that's really nice to see that you're hitting that, meaning this is far more likely to be a third wave. Also, you can check out your volume. You want to turn on your volume in here. Is volume increasing during this push to the upside? Let's zoom in here so we can get a better look at that volume. And sure enough, look at this. As we're pushing up here, you are getting a nice, massive increase in volume here as you're pushing up in this price action, making it more likely to be impulsive price action. Now, you are rejecting from that 3 Fibonacci extinction, wicked a little bit past it, rejecting. I would like to pull our golden pocket from your prior range highs, this range in here, to the lows that we made. Make sure this is on the low. All right, and then we're going to turn on our golden pocket, but I want to check to see if this is more than a 30% drop, because if it is, which it is, it's a 36% drop. We're going to take this, we're going to put this based off log scale. Okay, so now we're also going to throw on our 786 Fibonacci. And look at your 786 Fibonacci's right where your 3 to 1 Fibonacci extinction is. So this is an important resistance right here at 293 that we could be rejecting from. This could be the end of our wave 3. Let me just do this, and I'll take off these two. It's our 3 Fibonacci extinction as well as our 786 Fibonacci. Do we have any other levels there? Let's zoom out onto the daily real quickly. Yeah, there's a daily level there as well. So very, very important resistance that we're at right now. You can see that daily level was also right there, and maybe even no weeklies there. Okay. And a naked weekly point of control. Now, let's zoom in here to see, has that naked weekly been hit? Okay, the naked weekly hasn't quite been hit yet, though. Very interesting. But it was the naked daily there. Yeah. Okay, this was our important resistance. And guys, this could be the end of our third wave because there was a lot of resistance here, a lot of confluence of resistance in this general area. So your 3-to-1 Fibonacci, trend-based Fibonacci extinction, your macro 786 Fibonacci, and your naked daily point of control. Yes, that naked weekly is just above, and we do have some little liquidity resting into that, but I would expect that all of these are going to be taken together. You see this trail of liquidity. So if we start to break above this, we're probably going to sweep all the way up to hit that value area low. And it's going to start wicking these out, creating that short squeeze, pushing up higher, or that stop hunt that's going to give us fuel to the upside. But I would expect overall, even if we pull back from here, let me just take this off the chart so that we can clean this up. If we pull back from here, we're going to be looking for a fourth wave. So on this pullback, you want to look for longs in here to break up to take out this high. And even after that, you might look for another compound in this area. But you really want it to be longing in this little range in here. And as you're getting into your 4-5s, you want to start taking profit if you longed down in this area. Now, if we're scalping this thing, we've missed the big third wave. We've missed it, or most of it, if it's going to continue. But on the pullbacks, you can look for scalp longs just to take out the local highs. So let's assume the third wave is over because we're at the 3-to-1, we're at the 786, we're at the naked daily point of control. Let's assume it's over, and let's look at our wave 4 targets. So we're going to go from the lows of wave 3 to the highs of wave 3. We're going to put on our wave 4 targets, and this area right here, and I really like this 258 area, 257.8, because look, it's also an important support resistance flip. Let me just throw that on the chart real quick. You can see here, I'm just going to put SR flip level. So support, support, support. You lost it. It was resistance. You small back rejection. Now even locally support here, continue higher. So that area, 257.8, is looking pretty juicy for a long if we do come down to that area. You also have that liquidity from this low from Monday. Yeah, Monday's low is there. Yesterday's low. I want to check out. Let's see. Is there going to be a naked daily down there? There is not, but there is a naked daily at 253. Oop, let me turn it off. Yes. Okay. So we could even come down to 253 and still to hit that naked daily point of control in confluence with the pitchfork level and still not invalidate this. The most common targets are between the 382 and the 0.5 Fibonacci, but you can wick past the 0.5 as long as you don't hit this golden pocket here. You don't invalidate the impulse. Once we hit 248.2, you would invalidate the impulse. Now that is also important support, being the macro value area low in confluence with that. So I would probably expect a bounce, but to create a lower high before continuing down and probably sweeping, all of this. But yeah, 257.8 looks pretty nice. You have that internal liquidity grab from yesterday's lows and that 0.5 Fibonacci there. But overall, so because we saw our 2 1 2s in here, we're in our third wave. I would be looking for some 4 5s, 4 5s to come up to take out this liquidity here into your value area low. So at 323.4. Yeah, by the time we get up there, your anchored VWAP from that last big daily high could be right there as well. And so the as far as more macro time frame goes, after ending this impulse, that's what's going to be important. So do we end this impulse by coming up to 323.4, reject? If we reject this, guys, it would be the bearish backtest of this upper range, and it's your anchored VWAP on this downtrend. So if you're coming up in a pump to test that downtrend momentum, pretty much that's what we're testing the trend. If you reject here, man, you might continue lower. Or at least continue to hit that golden pocket, wherever that golden pocket's going to be. Let's go ahead and hide this for a second. But it does look pretty bullish here overall. And now that we're back inside our macro volume profile, inside the value area low, if we can break above 323, then I think we're going to continue up to this larger golden pocket. Let me make sure this is on log scale. Yep. All right. And yeah, look at your POC of that range, and your POC of your larger range is right around that golden pocket. And then your pitchfork midlines around there as well. So we break above 323. I think we are quickly coming up to like 385. Locally here, yeah, I even locally, we're probably going to continue higher because look at this is a pretty clear 3-wave corrective move. And now we're starting to push up. We've already hit the golden pocket, it looks like. Let's take that golden pocket. Okay. Almost hit the golden pocket. So yeah, I would say if we hit this golden pocket, yeah, you might see a small rejection from it. Maybe to come down to VWAP, but I would suggest we're going to continue up to this naked weekly point of control. Overall, I'd be looking for 323. You're going to get pullbacks before then. So longing the pullbacks, guys, is what you're going to want to look for. Okay, let me check this chat. Yeah, Big 2956, welcome in. Thanks for the live update. Do you think we could be in a wave 4 of the C wave in an ABC correction for Bitcoin? Let me check Bitcoin real quick. Be in a wave 4. Yes, I think I know what you're saying. You're talking about on larger time frames. So if we're on the daily time frame, I think I know what you're saying here. All of this is a wave 4 here. Or let me see here. Do you think we could be in a wave 4 of the C wave? Yeah. So if we're looking at this as an A wave, a B wave, a C wave down to take out your 74K lows, yes, actually, that's what I was looking at for most of the last few weeks here. 1, 2, 3, 4, 5 in your C wave to come take out your lows here. So yes, absolutely. Big 2956, absolutely. Going to 97. Yeah, it does seem like Tiki Taku, welcome in. It does seem like we are going to go to 96.5, 97K. Let's see. I went 2 weeks winning almost every trade, and then the last week I've lost almost every trade. Okay, I have to be better at recognizing the market and trading with the trend. Yes, Jaw Fuel, when the trend does shift, especially in crypto, it tends to be pretty aggressive. So overall, our larger bias, we're still in a downtrend, but on a more local bias, we are really nicely impulsing. So you don't want to go against that. You know, that's why we're looking for scalp longs on pullbacks on a lot of these coins, because they're in impulses. I mean, Sui, guys, I made a short about this the other day, but Sui is in such a nice impulse here. And I meant to make a short. It was a 1-minute video, but for some reason, YouTube didn't upload it short. But same thing, a 1, 2, 1, 2. We're in our big third wave here. Now, if we get some 4 5s in here, and I think we're going to come up to around this 220 area, the value area low, pretty much the same thing we're looking at on the Tau. We had our upper range here. This upper range was broken to the downside, and now we're impulsing up here locally to backtest that range, which also happens to be right around your pitchfork midline. We held the bottom of the pitchfork. You can see this. We held the bottom of the pitchfork here. So now impulsing up, breaking out of your range highs. You're breaking your range highs, closing daily candles above the range highs. For me, it's likely, even if we see a pullback from this 382 to backtest this pitchfork band, it's likely we're going to continue up to 220. 220 to about, what is that, 227. Nice liquidity resting into that area. And overall, here's another example, guys, of an impulse, but this is a much larger time frame impulse to the downside. We were looking at Sui being in a multiple 1-2 impulse to the downside. So you have your corrective channel here, 1 2 1 2 1 2. You have your triple 1-2 impulse, your big third wave here. Now we're in a fourth wave corrective move. The fourth wave corrective move is between the 382 Fibonacci and the 0.5. That's why I have the 0.5 on the chart, and that's why I also have the 382 on the chart. So this all could be part of a huge fourth wave correction here before seeing another 5, another 4, another 5, another 4, another 5 to kind of end this ugly ass impulse here. I will be looking for swing short opportunities around 220 to 227 if we get up there. But you could reject from the 382 right now as well. It doesn't have to get up to the 0.5. Trading the trend, I seem to be poo-poo caca at. Well, Jaffiel, I mean, it's all a learning process, man. But keep going with it. I know you absolutely know what you're talking about with trading, and you understand the concepts of trading very well. So now it's just about discipline and learning to shift your pivot with the trend locally. As I know you do a lot of scalping as well. So with those scalps, you know, right now it's hard to long right now, knowing we've pumped so aggressively on most coins. But I'm still looking to long pullbacks based off of most coins being in impulsive structures that are not finished. Here's your smaller 1-2. Here's your big third wave. Now we need some 4-5s in here. But that's part of a larger impulse to the downside that could be happening. Okay, yeah, and you are very good at trading, Jaffiel. I agree with Samuel S. there. You are very good at trading. Damn, I was hoping to get Tau under 200. You know, let me go back to Tau real quick. Under 200. I still do think it's possible. If you reject from 323, you know, you're going to come up here. If you reject from 323, you might come all the way back down to take out those lows and even come down to the bottom of the pitchfork. So, you know, 170, 175, 172 could absolutely be possible. But locally, at least locally for the next couple weeks, it looks like we're going to continue up in this little structure here, most likely to 323. And then if we can dump down afterwards, we'll see. We got to see how it reacts once it gets here. Let me guess, all bearish? No, I mean, locally, we're bullish. Locally, I'm bullish, looking for new highs. Overall, on the macro timeframes, yes, I still do think 80.5K lows are going to be taken out on Bitcoin. But locally, I just long this. The back test of the naked daily and the value area high. I'm looking to come up to around $96,600 where our large range point of control is. And I'm also short from this swing failure pattern. Okay, just call it quits. Okay. We did make a higher high on Bitcoin on that drive up, something to keep in mind on keep in on our minds. So wait, we made a higher high on Bitcoin on that drive up. Are you talking about on the larger time frames? Yeah, that's a higher high, guys. So that's a bullish break in market structure on high time frames. So now overall on macro, we have our higher high, higher low, higher high, higher low, higher high. You had a bearish break in market structure by taking out these lows or even taking out this low here. But now since the $84,000 lows, higher high, higher low, higher, not there. This was kind of a triangle in here, but here's a higher high, even breaking above this high. So now, even if we come down to 87,500, higher low, maybe to continue a higher high. And what would be really like max pain for the market is that this continues ranging sideways and up for even longer and longer. Like, you know, this kind of range in here continues for a long time. You know, the total market cap SFP'd the range highs as well. And for the total market cap, so unlike Bitcoin, Bitcoin has broken this pitchfork to the downside, guys. This is our wave 3 pitchfork. So on the higher time frames, we were looking at Bitcoin's is a lot nicer, but a wave 1 here, a wave 2, wave 3, wave 4, a wave 5. That is this on Bitcoin. Okay. Nice weekly impulsive structure. Wave 1, wave 2, wave 3, wave 4, wave 5. Now, in our third wave impulse here, we have a pitchfork that we can look at. And let me go ahead and grab that. I will turn off the fib channel and we will go to the pitchforks. Not that one. It is this guy. So you can see Bitcoin. This is our wave 3. So from the lows of wave 3 to the highs of wave 3 to the lows of wave 4. Well, obviously Bitcoin rejected the top of it at the beginning of the year. We dropped to the lower band. We rejected the upper band, but we lost the pitchfork. So you can see very clearly here. We lost the pitchfork and we back tested it 3 times. It's pretty much the same level. So you lose it, back test, reject, back test, reject, back test, reject. We're still underneath it. And until we can reclaim it, our overall bullish sentiment that's in here can't continue. I mean, it's less likely to continue this bullish sentiment, at least this strength of trend, the strength of this trend. But unlike Bitcoin, where Bitcoin has lost it and already bearishly backtested on lower time frames, we could do that and then dump. The total market cap, the same exact pitchfork structure on total market cap is holding. So that's your wave 3 lows to your wave 3 highs to your wave 4 lows. You can see it is holding just like Bitcoin at the beginning of the year. We rejected the top of the pitchfork. That's why at the beginning of the year, I was telling people I was taking profits on alts, beginning of last year, not this year, taking profits on altcoins and on Bitcoin and looking for a bigger drop. And we saw, but look at, this is so key here. We rejected the upper band of the pitchfork, just like Bitcoin did on its. We dropped to the bottom. And unlike Bitcoin, where it fell through, bearish backtest, bearish backtest, bearish backtest, and we're seeing this right now on Bitcoin, the total market cap has not lost the overall structure yet, the overall trend. It held. And now we're pushing up. So could we push up to test the pitchfork band? Absolutely, I think we could. And that's what I'm going to be kind of watching for. Now, we did just range SFP the range highs of this sideways range. So if we get a pullback, we have to be careful because it could be just the SFP of the range highs and dump straight away. But to me, it's less likely. To me, it looked like we're probably going to come a little bit higher. And if we pull the volume profile on this thing, you can see also we back tested the value area high just today, and it's holding. Okay, not Not a full back test there, but yeah, it's holding. And maybe we're going to continue pushing up now. Okay, focus on capital. Okay, yep. Are you in the stock exchange or something? I do play around with stocks a little bit, CJ. Mostly spot on stocks, but and I do some options trading, very little, but some options trading. But yeah, this is I'd say one of the things I do for a living. Works at a local. Yeah, I work at a local mortuary. Uh, AXSCB, welcome in, man. What's up to you as well? Hope you're well. Just joined. Yeah, I haven't gone over Solana. We'll go over Solana. I have to go over that Forex pair. Let's see. But let me, gosh, man, you guys, it's hard to, now it's hard to keep up with the chat and go over all these things. So we could all use some Himalayan shit. Yeah. Right, Mark Dutch? And maybe some Thai shit too, right? Okay, S&P just closed at S&P just closed at an all-time high. Wow. Yeah, S&P 500 I expected to come higher because we broke out of this value area high, back tested the value area high and the pitchfork band. So I do expect it to continue higher. We might even continue all the way up to the top of the 7,500-ish area. But look at this support level here is really, really nice. Value area low, golden pocket. If we come down to $6,700, man, that could be a nice long. Okay, let's go through some of these coins. I got to find that Forex pair real quick. Where was that? Okay. GBP. Is this a Forex pair or is this a crypto? Yeah, pound, the British pound. All right, so on the weekly time frame, I could tell you right now, this could be possible accumulation happening. It's starting to find a bottom here, or at least starting somewhat, even this part here, I would say. So I would like to pull my volume profile for this sideways price action on the weekly time frame. Look at that. Reclaim value area low, bounce from value area low, came up to value area high, rejected value area high, came back down to value area low, bounced from value area low, but this time we're trying to break out of the range. Yeah, I think it's likely that we are going to break out of this range this time. This looks sort of like a corrective move here, whether you want to call this a bull flag. But I think we're going to come take out these highs in here. Now, this is on the weekly time frame, so this could take a year to play out or like half a year to play out. Okay, we took out so very nice. Took out the liquidity of these internal highs and then dumped. That was super nice because look at how aggressive this dump gets after those highs. So there's going to be a lot of stops resting above those highs. So you took out that liquidity, 3-wave corrective move. This is what's important, guys, right here on the weekly time frame. 3-wave corrective move, okay? Now we're already hitting the golden pocket. If this was going to be a 5-wave impulse to the downside, like a 1, 2, 3, 4, 5, you can't hit the golden pocket from your highs of wave 3 to lows of wave 3. We've already surpassed the golden pocket. So now that makes this far more likely to be a 3-wave corrective move in here. And now we're going to break up and at least break these local highs right here. Also, we have broken above the value area high and back tested it over the last couple of weeks. And right now it's holding. So I would say it is likely we're going to come up to take out 143, 1.43, but it's probably going to take some time. And you will see pullbacks in the meantime. It's not going to go straight up there. All right, let me just zoom out to the monthly. Let's mark out that monthly level there. Yeah, interesting. So I don't like how Coinbase does this, but depending on how you pull this range, like on the daily time frame, the value area high is at 1.357. We zoom out to the weekly time frame, it's at 1.34, pretty much 1.34. So I hate how TradingView does that, but let's just throw on this sideways range here. Yeah, let's go from here. Okay, that makes it the same, 1.34. Yeah. So check this out. On the daily time frame, you're breaking above that value area high. You've just back tested it over the last week, and now we're big bullish engulfing candle to the upside yesterday, taking out the local highs. So that was your target. Upon this, you have the breakout. Upon the pullback, if you back test the value area high and it holds, you expect to take out this high. And we did. Boom, take out that high, and now we're pulling back here. So we could look for the golden pocket between this low and this high from today. You know, pretty much 134.5, 134.6, let's say. 1346. Yeah, and let's look at our pitchfork of this first. We want to check out this trend here. So, but we're going to make this a skiff pitchfork. It is skiff. Okay, wow. Yeah, very nice respect on this pitchfork. So rejecting from the midline, come down to the bottom, flip the upper band to support, or lower band, excuse me, support. But look at reject from midline again, come down to lower band, bounce, flip the midline, come up to upper band, reject the upper band, drop all the way to the bottom, reject or bounce from the bottom, reject from the lower band, lose the pitchfork. You came down to value area low. You reclaimed inside, rejected from the band, bounce from the bottom. After getting back inside the pitchfork, you bounce from the bottom. Small rejection from midline, pull back, flip the midline, come up to upper band, reject to lower band. Now we flipped the midline to resistance in here, fell to the bottom, but we're reclaiming the band again. So I would expect that move up at least up to 137-ish on this thing. Overall, I say it's likely that we are going to break up out of this. So we have this pitchfork. Let me hide this for a second, and we're going to look at our little channel here that we're seeing. Okay, so this is kind of like your bull flag, right? Like your pull, here's your flag in formation. If we break this, you would expect to come up and take out 143.7. And that will take time. I mean, this is on the weekly chart, guys. So, you know, it's going to even, I would say, coming into like August, towards the end of the year, we might be coming up, or, second half of the year coming up to take out 143. But I would at least locally expect to take out these two highs here, 137 and, 137 area. Weekly has confirmed bear divs here. Money flow's just crossing back into the green, though. That's good. Let's check out the daily again. And let me get rid of this. Why does this keep moving like that? Yeah, I think that we're going to continue chopping here. I mean, we might reject the top of the channel and come down again to back test this pitchfork band, but the pitchfork band is holding and you're breaking above that pitchfork band in here, holding above the value area high. So I think it is likely that we are going to continue up to take out these two highs. Now, what might happen is you might come up, take out that high, back test the channel, then come up, take out this high into your pitchfork midline, and then see a rejection from there. Push up, maybe, kind of create a sideways range in here for a bit. Okay, let's go through. Oh, good night, CJ. Time to say good night. Can I help you? Yeah, CJ, thanks, man. Thank you for joining. Always appreciate your insight and everything. How do I join the Telegram? So to join the Telegram, there's a link in the description of this video, the Telegram link. The first thing you have to do, though, is it's a private community. I've partnered with BYDFI. You have to deposit, sign up with BYDFI using my referral code in the description, and then deposit $100 into the exchange. Once you've done that, you can click the Telegram link in the description of this video. And once you're in that Telegram, type in /verify and then your user ID, which will be right up here. And that'll get you into the Telegram. Okay, let's see here. Let me go. We did Tau. We have to do Solana. Let me go through Solana really quickly here. And then Chainlink, Solana and Chainlink. So guys, Solana is pretty nice. Remember how we were talking about on Solana? We have our range that we've been focusing on between the POC of our large range and the value area low of our large range. Horrible lines, but... And let me just clean this up real quick, guys. We broke out of this key resistance at 135. That's what mattered most. And then let me get rid of this. And let's get rid of this small one. So, ranging between the POC and the value area low. Remember when we look at the volume profile for that. We were coming up, I forget, we were at 129. We rejected 129 right here, and we saw that pullback to hold the value area low. I was looking at 135. If you guys go look at last week's live stream, I was looking at coming up to 135 to 137. That is where the golden pocket in confluence with our range value area high was. Now, if we take this volume profile and we extend it back here, you can see at 137, we take our golden pocket from the highs of the range to the lows of the range. Golden pocket was at 135.5 and just above was the value area high at 137. And we were looking at taking out this liquidity here at 135.5 into your golden pocket and potentially wicking up to this area at 137. But we were able to break above that value area high. Now, the value area high has shifted. So if we pull it all the way, because this is still part of one single sideways range, all of this is our sideways range that we've been in between the value area low and the POC of our larger range. So we can take our volume profile and we can extend it. You can see, where do we reject? So by the way, guys, this level here, I was looking to short this and I freaking missed it. It was earlier today. I missed it. But this is the exact level at 143 was the exact level I was looking. It's the POC of your larger range, your 2-year long range. It's our 1.618 Fibonacci extension. So if we're looking at this as a wave 1, wave 2, wave 3, wave 4, and then we're going to get up to a wave 5. We're going to take out the range highs in a wave 5 before maybe pulling back here. The 1.618 Fibonacci extension at your value area high, your new value area high, at your large range point of control. And I believe the 786 was there. Let me see. Your 786 is a little bit lower, but that 143 area was an area where we expected that some sort of pullback from that area. And We did hit that 1.618. We hit the value area high. We hit the POC of our macro range. And we are seeing a small pullback so far. Now, the question is, are we going to keep going here? I mean, it's very possible we keep going here. Just like Tau and a lot of the other coins are breaking past the 1.618, we could break past the 1.618. Wait, Bitcoin decided to dump. No, to pump. Yeah, see, guys, this bullish backtest was important. We knew that the backtest there, that's why I longed that. Bullish backtest hit the naked daily point of control perfectly at 91,250. Now we're pushing. We're breaking the golden pocket. Now this makes it far more likely that this was a three-wave corrective move, and we're going to come take out the highs. I think we're coming to 96.6. Maybe not today, because we do have a naked weekly point of control at 96K, 95,971. But I do think we're going to come up to like 96 to 97K. Yeah, nice bullish push up. Wow. Okay. Hold on here. Nice bullish push up. Okay, we're short squeezing right now. Look at this dump in open interest, guys. This is a short squeeze that we're seeing. Huge drop in open interest. And when you see a short squeeze, guys, a forced close of a short is a market long. That's why our CVD is rising right now. But we know these aren't new long positions that are coming in, because if they were new long positions, your open interest would be increasing. So because our open interest is decreasing here, it is a short squeeze. It's short positions getting stopped out of the market, meaning it's a market buy, meaning the CVD is going to be going up. But it's not new money coming in. Now, here's the thing with the short squeeze, guys. With the short squeeze, after the short squeeze ends, if you do not have new money come in to support the price action, you want to see this start going up. You know, this could short squeeze a bit longer. We could short squeeze up to take out the highs. But you want to see some new money stepping in, and you want them to be long positions that are stepping in, or else this thing could roll right back over. Once the fuel for the squeeze ends, it could roll right back over. Anyways, on Solana, we are coming up to that 1.618 and the value area high of our 7-week long range and the POC of our 2-year long range. I do think there's still going to be a pullback from this area. If Bitcoin keeps pumping aggressively, maybe not. And what we can look at right now is pulling the golden pocket 786 area here. So that 786 at 141.86 is actually pretty nice, because that's your pitchfork band. And the reason why is because we broke market structure on this 24-minute time frame. We broke market structure bearishly by taking out that low. So because we took out this low, now we might form a lower high here before seeing another lower low come in. And we can look at, if this is the end of the third wave, we can pull our Fibonacci from the lows of 3 to the highs of 3. We can look between the 382 and the 0.5 Fibonacci, and this area in here is going to be between 134 and 131 is going to be the area where we would look to enter a long for your fifth wave. Wave 1, wave 2, wave 3, wave 4, probably backtesting the POC, and then get a wave 5 to break up here, probably to take out these range highs. If this third wave isn't done and it keeps going, then we'll have to rework this. We do have a daily level just above us at 144.68. All right, let's check our naked dailies out. I'm really starting to like that naked daily there at 131 because that's where your 0.5 Fibonacci is. If you remember, let's pull that 0.5 Fibonacci. Pretty much right where that naked daily is and that POC. So I would say this is a very nice support level right now. If we do pull back, so you'd want a 5-wave move down, followed by a 3-wave move up, followed by another small 5-wave move down, creating the overall A, B, C in your 4th wave, and then you'd expect a 5 probably to take out these highs. Maybe after taking out those highs, we get a move down to the bottom of the pitchfork, creating that overall tap 1, tap 2, tap 3, accumulation at the bottom of a macro value area low, expansion to the upside. That's what I would prefer to see on Solana, but you want to see this accumulation range form in here. So we have 2 taps of it so far. So after taking out the range highs, maybe we get that nice pullback. But look at, we're at the pitchfork band right now. Actually, that 141.86. Are we there yet? I just want to look at this, guys, because this might be a nice little scalp short opportunity. Here, and then let's go on to the 15-minute. Yeah, 141.86 might be a little scalp short to come down to like 132 and a half. So far, it doesn't look like it wants to reject. I mean, we're pushing. Okay, let's look at Chainlink real quickly here. Oh, sorry, Samuel S. I thought you said Bitcoin decided to dump. You said pump. Mark Dutch, thank you so much for posting that link in the description. So, guys, Mark Dutch posted the BYDFI link in the description. If you guys do want to join, that's the affiliate link. Of course, it's a win-win for both of us. You guys get discounts on trading fees, some futures trading bonuses, and you can get a great initial deposit bonus. And I just earn a fraction of the trading fees that you're going to give to BYDFI anyways. Okay. Okay. And Mind Tapestry, absolutely on that. Okay. MCSI says they aren't excluding stats company from their indexes. That's good. Okay. So guys, MCSI was that big index that was going to exclude like MicroStrategy and others from the index if they had too much of their treasury based in crypto. And it looks like, according to John here, and John, thank you for letting us know this. They aren't excluding DAT companies from their indexes. So that is actually pretty bullish because, guys, that could have been a big catalyst for a bear market. If MicroStrategy had to sell off a lot of its Bitcoin to stay in that index, that could have been bad. I'm going to do this. I'm going to set an alert here. Only if we're seeing bear divs. So far, it looks pretty bullish, guys. I mean, bear divs, but money flow looks very good. Chainlink if you guys watched my videos yesterday, not yesterday, last week on Chainlink, we were looking to come up between 13.75 and 13.85, which was the golden pocket value area high. And we broke out of it. Look at that was our golden pocket value area high. So we were down in here, and I was saying it's likely we're going to come up to 13.85. We are even breaking the value area high of our smaller range, but Chainlink. So pretty much we had our big pitchfork that was holding. You can see over the year of 2025, the bottom held, nice push. The bottom held, nice push. We came all the way down and we finally lost the pitchfork. Bearish back test, and we are forming a range underneath the pitchfork. But that's also our macro volume profile. Now, this volume profile is over 2 years long. It goes back to November of 2023. That's all this upper price action in here. And so we're just looking at that volume profile, very similar to Solana. We're ranging between the point of control and the value area low. We came down, we tapped into our box of support. I could probably get rid of this now. Let me hide this. I'm going to just hide this box for a second. But that was our support we were looking at. And then we pushed up, back tested the point of control and the pitchfork. We couldn't get back inside the pitchfork or close above the point of control. So we drop all the way back down. Now we did SFP our internal lows here, but we didn't SFP the actual lows. If you look at this, there's almost a double bottom there. But SFP, after that SFP, very similar to SUI, very similar to a lot of the altcoins, were in what looks like a double 1-2 impulse. So you take out those lows with the SFP. We have 1, 2, 1, 2, and a big third wave here. So now is that third wave going to come up to the point of control, reject it, and then we're going to see some 4 5s coming up to take out these highs up here to back test the pitchfork again. If we reject here at like 15.6 or so, 15.1, 15.6, then I think we're going to drop. Now, I am long on Chainlink from lower, and my final TP on this long is going to be around 15.6. First off, we have a daily level, and we had a naked daily point of control at 14.6. Wait, hold on. What is going on here? So that daily level is up here. I believe it was a naked daily point of control that was up there. And of course, okay, maybe it was a naked weekly point of control. No. But what we're analyzing here on Chainlink is this sideways range. All the price action pretty much underneath our pitchfork and between the value area low and the POC of our macro range. So let me clean this up. So we are chopping around right around the POC of the range, the more macro range. That's going to be important because this could be a rejection area here. Or we could come up a little bit higher. I think that was your 786 Fibonacci. A daily and a 786 Fibonacci. Haven't quite hit that 786 yet. Okay. But this sideways range here, we're attempting to break out of the value area high and flip it to support. You can see right now, that's kind of what we're working on right now. We're ranging between your large point of control and the value area low of your 7-week long range. But I think that it's likely to continue up because of this 1-2, 1-2. This could be the end of the third wave, though. We could pull back here for a bit. 4, 5, and then 4, and then 5 coming up like this. Coming up to take out these highs here at $15. Finishing this impulse up. So that's what I'll really be watching for to take out the highs at 15. And that is where the final TP would be. Now, money flow still looks pretty good here. We do have some bear divs, especially confirmed on NAMI. You can see all this bear divs here and money flows draining out. We are at resistance, guys. I would not be longing now. None of these coins I'd be longing now. Look at this. Multiple drives of bear div on Market Cipher B and money flow draining out. Multiple drives of bear div, money flow bear div here as well on NAMI. So we have confirmed confirmed bearish divergences on NAMI and Market Cipher B, the ultimate setup that I like to look for at resistance here. So we could be looking even very locally, left shoulder, head. You broke your market structure bearishly. That's important, guys. This break is a bearish break in market structure on the 1 hour chart. So we have finally now broken market structure bearishly. Because of that, now we can look for a lower high, maybe tapping into the 786 up here for a potential short, creating that head and shoulders. So let's pull this Fibonacci here. Yeah, coming up to that 786 would actually be really nice. And we're at the golden pocket right now. So let's throw them both on there. Golden pocket 786. I like the 786 a little bit better. But because of this break in market structure, now this lower high, at least locally for the day, creating a head or shoulder, head, break in market structure, right shoulder. This could be that kind of inverse head and shoulders range that occurs at your macro resistance with bear divs on the chart. And then we could dump. What we're going to be looking for is pulling back between the 382 and the 0.5 Fibonacci. Okay, and so coming between 13.38 and 13.11. Let me check to see if there is a fresh daily. Yeah, there is that daily. That daily order block there is really nice because, yeah, it's just really nice right there. And then we could look at the naked daily points controls. Yeah, no naked daily points of controls in between this area. Ooh, okay. Solana's hitting its level. We don't really see good bear divs here. If we start to reject from here, I might attempt to short from here, guys. So if you are shorting this, now no financial advice. I don't give financial advice, guys. I'm not telling you what to do. I'm telling you if I enter a trade, I'm not saying to follow me in any way, shape, or form. But I might be looking at shorting this 786 here. Of course, if we short this, your technical stop would be above that local high. Okay, give it a little bit of breathing room. And I would be targeting as a TP1 this naked daily at 135. You would take out the lows for the day into that naked daily point of control at 135. That's still a 3.5 to 1 risk to reward ratio on that scalp. But overall, I'd be looking to come down to the POC and that naked daily point of control. And that's a nice almost 6 to 1 risk reward trade. Remember, you're using generally 1% of your portfolio per trade. So, like, if we were going to do this, let me just pull up the calculator. Let's just say you have $1,000 account, right? So 1% of $1,000 is $10. That's what you're risking per trade is $10. Now you're going to take that $10 and you're going to divide it by this stop loss percentage. But because this is a percentage, you're just moving your decimal over 2 spots. So 0.01219. That is, oh, what did I do wrong here? $10 divided by 0.01219. You can use an $820 position, and if you get stopped out, you're only going to lose $10. So that's how you calculate it. You're dividing 1% of your portfolio by this number, moving the decimal over. Okay, no knees, no toes, no knees, no toes, no knees, no toes. I'm not sure what that means, John, but yeah, Mark, apparently John needs some attention. I made it pump, Sam. Coin operated, welcome in, and thank you guys. Yeah, please hit the like button for me, guys. If you got any sort of insight into the market from this video, please hit the like button for me. Please subscribe to the channel. Let's see. Solana is rejecting your bearish pitchfork perfectly right now. Okay. Which yeah, POC bearish pitchfork midline. Very nice job, Phil. This could be our pullback for our wave 3 because remember, it's also your 1.618. So if you take that trend-based Fibonacci extinction, lows of 1, highs of 1, lows of 2, 1.618. Let's make sure that's, let's see. Did I do that to this guy here? Yeah. We are at resistance on a lot of coins. And what I think it was the total 3. Yeah. Total 2 chart. We hit the top. We SFP'd these highs that I had an alert set here for weeks into the pitchfork band of resistance. Look at that perfect tap. So now, and this is, we got to readjust this. This is our 3. We might see a pullback in a 4, and then we might continue pushing up in a 5 here. But I am looking for this. And this, once again, this is a double 1-2 as well. 1, 2, 1, 2. Here's your big third wave. 4, 5, and then we might see another 4, 5 in here. But kind of creating that range that forms in and around the pitchfork bands. Sometimes I dream I'm a whale scooping up plankton for fun. Then I wake up and realize I'm plankton myself. Yeah, Mark, same here, man. Same here. Oh, I see head and shoulders, knees and toes. No, man, John, no, you're all good, dude. A VWAP retest would be nice. Paper Beats Rock, welcome in, man. It's good to see you. And Sad 2725, welcome in. Yeah, let's look at CVD here. Wow, just a huge dump in open interest, guys. We're seeing a short squeeze right now. Huge dump in open interest. Your CVD is increasing here because it's shorters getting stopped out, which is a forced market buy. That's why we're seeing the CVD rise here. So we want to be looking at, let's get here, Bitcoin. Honestly, Bitcoin looks pretty bullish here. Money flow looks pretty bullish, just crossing into the green. Nami is showing the bear divs on the 5-minute. And even money flow bear divs locally on the 5-minute. I would be looking to come up a little bit higher because look at on the 5-minute, you're breaking above the golden pocket, trying to flip it to support very locally here. So I would at least be looking to come up to this $94,050 area. But remember, once again, guys, because we did bounce directly from our support level earlier today on that drop, we do have to say that overall, these lows from yesterday are likely to be taken out, even if it's not right now. We could do this, reject, and then come down again, see another higher time frame, seeing a larger corrective move in here, and then come up. So it doesn't have to happen immediately, but it is likely to take out the highs at $94,800. And remember, at 95,970 is our naked weekly point of control, pretty much 96K. At 96K, we have a naked weekly point of control. So from this move up here, that would be a TP level for me. Actually, I'm going to TP. I already told you guys I have a limit TP set at these highs already from this long here. Did Solana. All right, we are seeing a little bit of a rejection from that 786 on Solana. And remember, for the day, because we broke this low, now we have a higher chance of making a lower high before coming down and making a lower low into this naked daily at 135.4. Okay, let's see. Vibe all day, welcome in. I am back with a long setup. Himmy looks amazing for long. Check it out. Okay, Himmy. If it bothered me, I would have deleted it, John. Yeah. Get that chip off your shoulders, Mark. Sudeep, welcome in. Much love, and it's good to see you in here. Thank you for being here. Thank you for modding. Himmy, USDT. Ooh. Looks like we've looked at this before, way back in the past when it first launched. I mean, it is starting to form a nice rounded bottom on the daily. Your money flow looks pretty good here. Is this the right one? Vibe all day. Is this the right one that you were looking at? Let's check this out. Man, that's just pretty bearish, guys. Yes, it's built by one of the fastest first Bitcoin. It's built by one of the fastest Bitcoin developers. First Bitcoin developers. Hockey stick pattern. Yeah, seriously. Okay, so what I would be looking at on this is this sideways range that we're seeing. We're breaking out of the value area high of this range. We flipped it locally bullish. We continued up higher. Yeah, I mean, this does look bullish locally. And you could even pull this range kind of looking at all of this. It looks like this wick is on all the exchanges too. You hit that non-log golden pocket. So let's go ahead and so this 786 near the daily looks pretty juicy. Man, come on. All right, this naked monthly point of control. The thing is with this thing, Vibe All Day, is it is pretty aggressively sold off since its launch. But it looks like it's starting to find a bottom. Honestly, momentum is pretty bullish. Let's check out the 8-hour chart here. Yeah, 8 hours still looks decent, but you are starting to develop potential bear divs here. You did print a hidden bull div, back testing the value area high. Yeah, this is a little bit better. Hidden bull div on that low from a Sunday. Now we're pushing up. I would think we could push all the way up to take this liquidity into your 786 and your daily level above us. But you might see a pullback from this area and then, maybe to even come all the way down to back test that value area high before continuing. Yeah, and then I mean, like we could look at a very low time frame pitchfork in here. We're gonna pull it down to this low, and we're gonna use. Okay, yeah, pretty nice here. So we were chopping around at the lower band. We broke above, working on flipping that midline right now to support, and then this golden pocket at the top. But I like, and actually, let me check the modified one out. No, not quite as nice. But yeah, I would at least be looking. Yes, this golden pocket has been hit before. So we could actually pull a new golden pocket. It's going to be already tapped, but from this high down to the low. So I'd be looking more at that 786 Fibonacci. And this one, we have to make sure it's not on log scale. Yeah, we're coming into the golden pocket, and we still haven't broken it yet. You can see the first time we tapped it, we got a nice pullback, but it was a three-wave corrective pullback. Look at tap it, 1, 2, 3, and now you're impulsing up again. You've taken out those highs. You're still in the golden pocket, but I like this level, this little area here is pretty decent. And then if you break that, I would be looking up towards this general area. And you're probably not going to, you might do this and then come back down, back test that, chop around in here. And then by the time you work your way up here, this pitchfork is going to be closer to your 786 in your daily. Just be careful because it is starting on the, especially on the 8-hour and the 4-hour, not confirmed yet, but it's starting to develop potentials for bear divs here. NAMI, not even on NAMI, but on Market Cipher B. Higher highs, potential lower highs, not confirmed yet, and your money flow still looks pretty bullish here. You are at resistance of your golden pocket, your logarithmic golden pocket, pulled from this high to this low. Okay, okay, I Ducci 74, welcome in, man. Yeah, we'll look at ZEG. It's seating Garzik, who's behind Himi, was one of the OGs behind Bitcoin back in the day. Okay, all right. Well, thank you. I might have to check this out. You're long from 19. Okay, 19. Okay, you're long from 19. Okay. That's good. I'm not sure what you were looking at on that long there. Because remember, with every trade you take, you should be analyzing your risk management. Why did that do that? What is going on here? Why is that doing that? That's weird. So if you did 19, your technical stop should be below this low right here. And I would be targeting that 786 and that. Now you're up a little bit higher than that. You're up like right here. Yeah, just be careful on that. I understand you're in bullish market structure. It is likely to go higher, but you are at the golden pocket. And it could pull back from this golden pocket. Yes. Okay, so ZEG. Okay, you said you have a large position at 554. Okay, this you mean 0.554, I think you mean. Okay, well that looks pretty nice. So it's definitely in a range, a sideways range here. But this did look a little bit like a distribution here. Like left shoulder head, right shoulder, or tap 1, tap 2, tap 3. You're breaking the range lows. You probably back tested the value area low here. So be careful for downside. Let's look at that value area low. And we'll zoom in on this in just a second here. I think we just back tested the weekly level. Yeah, not quite. We didn't hit it. And then you have that weekly that's up near that value area low. So this is your upper range that you lost. And look at, you lose it, bearishly backtest it. Once you reject there, you expect new lows. It would have been nicer to hit this weekly, to actually hit the weekly at 05371. I mean, money flow is coming up. You got to be careful. You did print a hidden bear div a couple days ago, which is continuing. Well, I guess that hidden bear div already played out because you printed the hidden bear div on this candle. You took out this low. So, yeah, in some ways that played out. Let's do a lot of wickage to the upside. Now, one thing I see here on the daily time frame, especially in this chunk of price action right here, look at all those wicks to the upside on the daily. Wicks to the upside, wicks to the upside, wicks to the upside, wick. So it looks like this thing is being sold off every chance it gets. I mean, it could just be low liquidity as well. But I would be careful with this, and I would be analyzing on the lower time frames. If you're scalping this thing, which it seems like you are, I would be analyzing this sideways range in here. So you have your value area high coming up at 0.06178-ish. Ooh. Where am I looking? There we go. Yeah. All right. Be careful for this 382. That is right at the value area high. And here's the thing. We did front run this weekly. I would have thought we would at least come down to that weekly. It was probably also, let's pull this. And then we'll look at Bitcoin in a second here, guys. Yeah, with that 786 being just below that weekly, I'm actually very surprised we didn't come down a little bit more, and you still could. So this would be like the support below us. And then the resistance I'd be looking at locally is 06184. So if you are long on this thing, you might want to consider taking at least a partial profit at 06184. I would just be careful because you did already reject the value area low of the larger upper range, and this could be possible distribution that comes down. And like, this is a little bit weird because this is right when it launched, so I'd take it from this low. Okay, you are at the macro golden pocket. Pretty nice there. Overall, bouncing from your macro golden pocket on the daily time frame. You can see that right there. You're bouncing, you distributed down, bounce from the macro golden pocket, the log golden pocket. If you take that off a log, you can see it shifts it a lot. You want to be on log scale on this, and you want to have that golden pocket on log. So you're bouncing from the log golden pocket, and then you did break daily market structure bullishly. That's good. What is scary here Let me just hide all this junk real quick. What is scary here, after bouncing from your log golden pocket, this looks like a 3-wave corrective move in here. 1, 2, 3-wave corrective move. And now if this was going to be a 4 and then a 5 to continue up impulsively, you don't want to hit your golden pocket from the lows of wave 3 to the highs of wave 3, and you have. You actually came down to your 786, even your 886. Actually, the 886 is just on that weekly there. Could we count this? Let's see here. I mean, this is such a mess with the wicks here. If you wanted to try to fit this in, you know, a 1, a 2, a 3, a 4, and a 5 here. But even in this 5, you only see a 3-wave corrective move here. To me, it's far more likely that this is a larger 3-wave corrective move here. And you're likely to, you might see some bounces from around here, lower high and then lower lows here. But I think overall, this might continue the downtrend. You're at the large golden pocket, at least after rejecting that value area high at 061, whatever it was, you might come down to hit that weekly. So more local stuff here. After rejecting from 06184, you might come down to the weekly. Be careful trading low liquidity coins like this. Guys, Solana got that rejection. So if you scalp this with me, TP1 would be that naked daily. And remember, we were looking for the short here because we took out market structure bearishly. So now lower high, lower low, forming an overall bigger 3-wave corrective move. Or actually, I'd be looking for an impulse down, 4, 5, and then a larger 3-wave up, and then another 5 to come down here. So a larger, in that move, you want to take a few days. You want this overall wave 4 to take some time, so it's equal to. Okay. All right, guys. I do have to get going. I will be around on Thursday as well. Live stream 2 p.m. Eastern Standard Time. Tomorrow, I'll make a video around market close for you guys. Thank you all so much for being here. Please hit the like button on your way out. Thank you for everything, guys. I really appreciate you guys as a community. Love this community so much. Remember, if you want to join the Telegram, all you got to do is sign up with BYDFI using the affiliate link. Deposit $100 into the exchange. Once you've done that, click the Telegram link in the description of this video. And then once you're in the Telegram, /verify and your user ID, which will be right up here. And that'll get you access to the Telegram. You guys can tag me in the general chat, ask me questions, and also just keep an eye out on my Divine Hood Trade channel for whatever I post there. So thank you guys. Have a good one, and I will see you next time.